Well, hey, welcome. My name is Rocco Valentino. I'm the market president in Houston with First Service Residential. And with me is Vice President of First Service Financial, Jamie George. Jamie, how you doing today?
I'm good, Rocco. How are you doing?
Good. Well, listen, I want to just have like kind of a little discussion. Maybe, you and I, as we've been chatting and going through some stuff, might be helpful for some of the people viewing this, or even, inspire ourselves to come up with better and bigger ways to do things. Just to kick things off, what is it that you do for First Service Residential, and how does that work in collaboration with what we do?
Absolutely. So, as you mentioned, I am First Service Financial. So, that's what we call a sister company of First Service Residential. So, in a nutshell, what I do is help all of our clients with their insurance. So, I'm licensed in all the states that we operate in. I've been doing this for many, many years. I don't want to say how many. So, I am that in house resource along with my team. We have across the nation that can help our clients. We can be that subject matter expert that has those insurance licenses and speaks that insurance speak and can be there to help our managers and clients with their insurance needs.
Fantastic. And I appreciate that. When we talk about insurance, a lot of things come up regarding HOA insurance and that. We hear terms such as umbrella policies. And then we've been hearing a lot, what does 2023 look like? What does the state of the market look like, and things of that nature? Could you elaborate a little more on that, and maybe talk a little bit about what the future holds, umbrella policies, and some of the things we've been hearing a lot of chatter about?
Absolutely, I would love to. So let's take that first question about the market and the conditions of the market and what we're seeing as of late in the market.
Yeah.
So it's been ever changing. The market's been hardening for the past 3, 4, 5 years. It continues to harden. It has not gotten softer yet. And we continue to see issues with, we have property side of claims and losses. And we also are seeing more liability side of claims and losses. So, we're seeing insurance companies have higher payouts of claims. And that's the reason that you're seeing this hardening market and, increased rates, tighter underwriting. We're seeing some carriers not ride in the space anymore and maybe pull out and not be doing certain lines. Umbrella could be one that you mentioned.
Yeah.
Um, so let's pop over to umbrella for a minute. We
Okay.
are seeing that line harden tremendously. So we are seeing some carriers pull out. So depending on your risk exposures, you might be fine and you might have some issues.
Yeah, and I don't mean to cut you off, Jamie, but if I could, maybe take a little more of a laser focus on that when we talk about the amenities. I know a lot of single families have such many of the slides that we've talked about before. Does it matter about the height, and is there back coverage? Do we have additional support? And I think there's some misnomers out there that maybe you could kind of help us out with and shed a little more light.
Absolutely. Great question, Rocco. So amenities play a huge factor in the rating of your insurance. So all the carriers look at your different amenities and they rate for those factors. So they're premium driven.
Okay.
So, you can have a small single family HOA that might not have any amenities. They might have a sidewalk or something of that nature. They're not going to have near the risk that let's jump to the other end of the spectrum to a HOA that has a huge, beautiful clubhouse with a beautiful pool with a water slide. So that water slide these days in this market, regardless of height, carriers are not wanting to take that risk on. So right now, I know that there's one carrier out there, admitted carrier, that would take on a water slide exposure risk because they look at it as a very large risk. If you do have something that happens there, they look at, those limits are probably going to exhaust. It's going to be a catastrophic loss.
Yeah.
So,
That's
the water slide holds a lot more liability than, say, just a normal pool would.
Yeah, and there it is once again. I think when we think we're adding value from an insurance standpoint, it's not viewed through the same lens as maybe a homeowner experience versus the other side, the legal risk and certainly potential risk, right? I mean that always is the number one insurance game that we have to play, right? How do you
Exactly.
forecast that?
Exactly. Exactly.
Well, let me ask you this and maybe move on, or maybe move backwards, I should say. Um, with our single family associations and communities, we talked a little bit about, you and I did earlier, um, about the winter freeze in Texas and things of that nature. Is there some best practices that you could share, whether it's like, hey, make sure you get out there and you take the photos, make sure that are preventative. I think we've got a good PM program, but it's always a good reminder. Can you maybe just expound on that just a little bit?
Exactly. So, as you're aware, during the winter freeze of 21, we had many associations that suffered damages. So, it's very important that if you do suffer those damages, that you do everything to mitigate your loss immediately. So, ensure that you're getting those branches removed off your roof or covering up that window or whatever might be damaged. And preserving the property, getting any water shut off that may have leaked or pipe might have burst, and if you need immediate repairs to again preserve that property, then you need to go ahead and take those steps. Even if that money is immediately coming out of the, pocket of the HOA, ensure that you get them done. Go ahead and make those moves. And then to your point, take pictures, take video.
Well,
You can even take video of damages before and then your temporary repairs, along with your receipts, can help an adjuster see exactly the condition it was in right after the loss and what you've done to prevent further loss of property.
wow, that's a great point. I didn't really think of that, but taking video is probably the best storyteller out there. And that's, yeah, videos don't lie, do they?
No, they don't. And it's a wonderful way to show the changes that you've made to the damages so that
Yeah.
the adjuster can understand what those initial damages were.
Right, that's great. Well, that's a good point. When we talk about coverages and we hear the word umbrella policy, and I think people um, perhaps think they know what that is, but from a clarification standpoint, might be a little remedial. But can you just kind of just tell us about an umbrella policy, just maybe the overview differences and what where that kicks in and where it doesn't, or what we think we have? What about that?
Abs- Absolutely. That too is a great question, Rocco. So, umbrella is a liability policy that goes over and above your underlying liability policy. So, your general liability, which protects the association against third party claims, whether it be property or bodily injury. Um, they also should be carrying directors and officers to protect the board over their decisions that they make while governing the association.
Yeah.
So the umbrella should also follow form over that directors and officers policy. So that can be one difference that you see in different offerings of umbrellas. Not all of them will go over a directors and officers policy. So that might be one question that you want to ask your insurance broker.
Mm.
Another misconception that I see is um, a lot of people have the misconception that an umbrella policy will go over your property, your first party coverage, property coverage, if for whatever reason you are underinsured and do not have your proper values. And an umbrella will not go over first party property damages. It is a liability policy. So it goes over your underlying liability policies when they are exhausted. So essentially, in the case of a catastrophic claim, which these days, with the state of claims turning litigious and attorney retention, we see a lot of underlying limits
Yeah,
exhausting.
I think I just learned something right there, Jamie. Would you repeat that again? Because um, I know I can't be the only one. So that's the essence of the umbrella policy. If you're underinsured, it doesn't step in.
Not on your first party property.
Right.
It is a liability policy.
Liability policy.
So if there's a lawsuit allegation, well,
Yes.
let's just go back to that slide for a second and use
Okay.
that, or even any pool. If you had anybody injured on a slide and or in a pool, let's take a child, for example.
Hmm.
That is going exhaust your underlying limit
Right.
of $1 million, guaranteed. So your umbrella policy will then kick in above your underlying limit. So most general liability policies are a 1 million per occurrence and 2 million aggregate. So that 1 million per occurrence is going to run out.
Yep.
If you have a child in a vegetative state because they hit their head coming down the slide, you could be potentially looking at a $10 million lawsuit. So that general liability carrier is going to pay their underlying limit probably almost immediately, and then it's going to go to your umbrella coverage if you have one. So my recommendation to any board out there is always, if you have any pool, water slide or not, or any body of water, you should always consider an umbrella. And even in the cases of not bodies of water, I've seen slip and falls these days on a sidewalk become more than $1 million very quickly.
Well, that's an excellent point, and I think that clarification really kind of fleshes out some of that discussion. I really appreciate it. And let me ask this question then: is it possible to be overinsured, or is that more fantasy land type talk?
So, I mean, in my eyes, that's a little bit of fantasy land. I think we need to break it down into two categories, into property first party coverage,
Yeah.
and then into a liability section. So liability, as far as that goes for an association, I always think like I just mentioned, I think everyone should consider an umbrella policy, whether you have a body of water or not. If you have a body of water and a pool and a slide, you should consider higher probably than a $5 million umbrella. It's just, again, something to consider. Now, on the property side of things, we're seeing this is this is something that we're seeing a lot of these days with the latest renewals is carriers are looking at the values of the items that are being insured. There are a lot of associations out there that haven't had an appraisal on their clubhouse or updated their values, even though they might have, gotten new pool furniture or installed a security camera system or something of that nature. So carriers are looking at their insurable values, and we're seeing a tremendous amount of inflation as well. So cost of rebuilding a clubhouse has gone up 20 to 30% in the last few years with the cost of goods, materials, and the cost of labor.
Yeah, literally, right? We've all unfortunately been experiencing a lot of that. Well, let me ask you this, Jamie, in the sense that homeowners obviously want to protect their value. Associations always want to become or maintain the experience in the community, the lifestyle, if you will, and certainly property values. Everybody always wants their value to increase, no doubt. But when it comes to insurance, it always seems like that's an assumption or just a foregone conclusion. And a couple of boards have asked us, some single family boards have asked us that their governing documents don't really stipulate that stipulate what insurance they should or shouldn't have, and I think in some states even it doesn't even mandate that you have insurance. But as a best practice, what would you advise boards when it comes to possibly amending or assisting their governing documents, because it's not just for the board members, it's the reality of it, it's for the whole community. And unfortunately, we're only as good as our boards are sometimes. So with that, is there something that you would say, hey, this is always kind of a blind spot, or this is what we see on the back end of this, and boy, if you had your druthers and could do this over again, what would you recommend?
So there's 6 lines of coverage that I would recommend for an association. Some of them are obviously basic, the general liability, any first property coverage for assets that the association owns, clubhouses, common amenities, directors and officers to protect that board, and any volunteers, because it will, extend protection to committee members as well if they have a landscape committee or something of that nature. I would also recommend crime or fidelity coverage, because that will protect the funds of the association. That umbrella policy we talked about, I always think that is something they should consider. And then the last one that I always recommend is workers' compensation. And a lot of boards don't consider this because they don't have direct employees. They have a management company. The employees are, you know, employees of the management company. So they fall under the management company's work comp. And that is absolutely correct. But there's actually two misconceptions about work comp.
Okay.
Is if you get a great work comp policy, it will cover your volunteers. So it will cover your board members and those committee members. So I've had a board member, Rocco, fall off a ladder hanging a picture in a clubhouse and puncture a lung.
Ooh.
So while it didn't cover their wages, because we all know that board members, get paid so much to do this,
Yeah.
it doesn't cover any lost wages, but it did pick up those medical bills.
Oh, wow.
So that can be huge. Even if they have a health insurance or something of that nature, prescriptions and copays and deductibles can run into the thousands. So it picked up all that.
So that workers' comp then would cover the volunteer position.
Correct. Correct.
And maybe this is getting too granular, but how much more additional is the cost of that? Is it, really significant? Is it minuscule? Is it, hey, you should just do that as a best practice, or
you should do it as a best practice? And in the state of Texas, it's $330.
Wow.
So the other reason, there's one more, what I consider very huge reason why you should consider carrying it, and that's for the vendor side of things. So we all hire vendors. Yep. And they all have their own insurance and their own workers' comp for their employees. And First Service Residential has a great vendor services that we verify all of this.
Yes.
But the one factor we need to realize is that any of those policies could cancel at any time for non-payment. If an insured does not make a payment, they could be on monthly payments. And if their payment doesn't reach that carrier is going to send out what is called a 10-day cancellation notice. 10 days. So it could be in the mail, and we could be entering it into, our vendor services system so that we are aware of it. But on that same day, they could be out on a property and one of their employees could get hurt. And when that employee finds out that that employer's work comp had lapsed that day and there's no coverage, they will pull the association into any lawsuit. Now, two ways we could go here. Is the association going to be liable? No, probably not. But do they need to defend themselves in court? Yes. So for that $330 of annual premium, I don't know about you, but that's a very, very good priced attorney.
Well, it sounds like a wise investment to make in that. Honestly, Jamie, I didn't even think of that being from that aspect, because you're right. We've got a great vendor validation process, and when it comes to vendors, yes, they have to be insured, and we're also named on the insurance, so we know when insurance lapses. However, I think you brought up a great point, because what happens, it does lapse. We're notified when it's getting close to being, or lapsing or that, and why would you want to roll the dice on something like that? I that's such a great point, and probably one of the most overlooked things, as you said. That's awesome.
It really is. So like I said, it's a great investment for boards for the minimal cost. They have quite a few areas of coverage that they might not be considering.
Well, let me ask you this then, since we're talking about, and unfortunately it's that, conversation that we have to have when you talk about litigation and things, and that's why we have insurance, right? It's, you have that protection, that peace of mind, if you will. When it comes to like state laws and things, has there been any changes? And I know with some of the new legislation, individual board members, volunteer people can be sued, in our state. But is there some new legislation that's come out that has kind of like made you guys raise some eyebrows, or at least take a second look, or maybe read that section once again to be like, is it there or not there, or what are we looking at really? Is there something that?
Not that I can think of off the top of my head. The one that does concern me is the state of Texas and board members being personally liable.
Yeah.
I need to do a little bit more research on that and see exactly, what the caveats are to that. Because to me, it seems it's very broad.
Yeah.
And that the board members should always have that protection under the HOA's policy.
Right. Well, yeah, I mean, obviously that's right. And certainly we definitely do a great job advising our clients, but if someone is new or things of that nature, we always want to make sure that the boards understand, what the position is and the partnership that we all have. When it comes to maybe property damage and things of that nature, I know we kind of covered it. Is there anything from liability or property damage that we haven't really kind of touched on or revisited in a while? I know you're very proactive with our leadership team and having conversations, but just in general, is there some topics that, we kind of just back burner because it's always a constant, it's always there and we do a good job with it, but might serve as a good reminder or just, or we pretty clean?
I think that we're pretty good, but I always like to send out the reminder of just a couple simple risk factors, especially for, the single family HOAs. Make sure that you're keeping, if you have a clubhouse, keep those trees trimmed back from it. That can help with not only wind and hail, it can help with fire exposure. And the other thing, and I've had a lot of associations, deal with this. If you have sidewalks and things of that nature, make sure that you're keeping them maintained. It is a lot more reasonable to, fill them with slurry once a year and make sure your cracks are filled in, then let them crack to the point where you need full replacement and you're having carriers cancel you because of lack of maintenance and it's those type of things that cause slip and falls.
Yeah, that is such a great reminder. Well, listen, I really appreciate you taking time with me today and us just kind of having a little chat and going over a few things and certainly best practices. Jamie George, Vice President, FirstService Financial. Really appreciate chatting with me today.
Thank you so much, Rocco. It's been a pleasure.